Zoom stock, ZM is the ticker, had a monster COVID run. Now the stock, however, is down something like 60% from its highs. It's one of those rare tech stocks that not only have growth, but also immense profitability, which got me interested saying, hey, should I look further into this to see if the risk reward is potentially compelling now that the stock's down about 60%? I'll share my recent takeaways about their quarterly earnings update, which just came out, as well as the underlying valuation in this video. If this is your first time tuning in, my name is Daniel, and you're watching Unrivaled Investing, a no-hype mission-focused channel trying to find you exceptional companies and unrivaled investments. As usual, in full disclosure, this is not financial advice, and at the time of this video publication, I did not own any stock in Zoom. ZM is the ticker. So Zoom reported their calendar third quarter results, and while the stock declined slightly in the after hours, I think it declined something like 7%, their core customer metrics remain very strong. 94% growth year over year for customers contributing over $100,000 in revenue. That's on a trailing 12-month basis. Customers with more than 10 employees were up about 20% year over year. I mean, these are very strong metrics. Their revenue continues to grow at a great clip as well, something like 35% growth year over year, while newer initiatives like the Zoom phone product for enterprises is quickly gaining mass adoption and growing at hyperscale. They also continue to have top-notch net dollar expansion rate of 130% for customers with over 10 employees. So this means if you are a customer of Zoom with over 10 employees that use the Zoom products for your company, you on average, that cohort of customers for Zoom spent 30% more year over year. So that includes the folks that leave Zoom. That includes the folks that spend the same amount. That includes the folks that spend more. Overall, 30% more just from the existing customer cohort. That is really top-notch net dollar expansion rates. Now, I'm looking at this and I'm wondering, is it possible that the recent 60% drop in the stock price is creating an opportunity? Unlike many of the other growth stocks that have recently sold off, Zoom is actually immensely profitable with nearly 30% profit margins. It is a little bit of a question mark for me, given that they spend nearly $300 million per quarter on sales and marketing. Could their profitability actually be much higher in the future? Now, this is I'd argue the key point on why the stock price is down following their quarterly results, as well as down significantly, since their high, is that their growth has decelerated significantly. It was around 54% year over year in the last quarter. Now it's 35% in the current quarter. I personally think 35% this quarter, so that's year over year comparison, isn't bad, given that last year, this quarter, they grew 367%. So that last year was really the crazy, COVID benefit. So they're growing 35% on top of that. That's really solid in my opinion. That said, what Wall Street really doesn't like, and I can't blame them for this, so this is Mr. Market right here, is that their fourth quarter 21 or fourth quarter calendar guidance of a little over $1 billion in revenue implies only like 19% year over year growth. This also means no growth from their current quarter, so no sequential growth. And so that does raise a sort of a red flag, sort of saying, are you having trouble selling additional customers? If so, why are you spending $300 million on sales and marketing if you're expecting no sequential growth? It's, it is a concern, especially where you're like, well, wait a second, how is that possible with 30% net retention? So are they just sandbagging their figures? It's definitely something to consider. Last year, for perspective, they grew 14% sequentially from the third quarter to the fourth quarter. Now they're effectively saying, hey, we'll be flat, because they're saying, hey, fourth quarter, we're saying $1.05 billion in revenue. So what are my quick thoughts on the valuation given sort of these red flags, and also given the fact that, look, this is an exceptional business given how lucrative they are, how literally millions of people are using their product around the world. It's connecting businesses and families and individuals all around the world. What are my thoughts on the valuation? Also, given that it's down so much. But first, a quick plug, where if you're interested in following along with my personal financial journey, go to unrivaledinvesting.com, where each month I call out potential multi-baggers as well as my personal portfolio. We have an exclusive community dedicated to learning and trying to find exceptional companies on Discord. I interact on Discord on almost a daily basis. So once again, if you're interested, go to unrivaledinvesting.com, click join the journey. And if you enjoy learning about exceptional companies, potential multi-baggers, please make a point of hitting that subscribe button. So, looking at Zoom now that in the after hours, it's now around $227 per share, a little under $70 billion market cap, around $65 billion enterprise value because they have about $5 billion in cash on their balance sheet. I'm very impressed with Zoom. Once again, ZM is the ticker, their profit profile, and what they've been able to accomplish. A bigger question is, what's the long-term revenue growth for this business? One of my investment checklist questions is this inevitable? That's the sound of the inevitable, Mr. Anderson. That's what I'm looking for. And when I'm thinking about their future growth, I'm not sure it's really clear to me. Yes, with COVID, that became very, very obvious, and they had several 100% growth. But in the decade ahead, it's a lot less clear to me that they'll continue to post, let's say, just mind-boggling, high growth figures. After massive growth these last few years, it's unclear to me why, let's say, their growth rate should accelerate significantly beyond a range of, say, 20 to 30%. And that's what I'm penciling out in this valuation, trying to give them credit, 20 to 30%. Keep in mind, that's an acceleration from what they're guiding to in this fourth quarter on a year-over-year basis. Now, look, they are still growing quite significantly. Something like, I'm penciling out, this is once again based on their guidance of around 4.1 billion for the year, just shy of 4.1 billion for the year. So I'm giving them credit for that, maybe even a little bit more, saying, hey, maybe they're sandbagging it. But it does raise the question of, well, what's their growth look like in the years ahead? And I don't have high conviction on why this should, let's say, be 40% per year going forward. It's just honestly, it's not real clear to me. And there's a very real, risk that they whiff on this sort of growth, given that their fourth quarter calendar 2021 guidance is for less than 20% growth and zero sequential growth from third quarter to the fourth quarter. So that does sort of raise a red flag. And keep in mind, this is a hypothetical, framework that I'm talking about here. The stock price can always go way higher or way lower. A lot depends on animal spirits, and a lot depends super heavy on execution. If they do not, let's say, deliver 20% annualized growth over the next 5 years, I'd say the stock price would definitely have some pressure. So I'm trying to think about, okay, so what are the give and takes that you can consider with their valuation? I'm assuming optimized margins of 30 to 35%, annualized growth of 20 to 30%. So that's, and assuming some sort of end multiple, around 20 to 30 times end earnings. They talked about how their taxes is going to be around 23% on the most recent earnings call because they used up a lot of their NOLs. So I'm looking at this, and honestly, I'm just not seeing a crazy, upside downside profile at the current price. At what price would I be interested, assuming a 20 to 30% growth profile and these types of optimized margins? Maybe around $150 a share. Now that's obviously a lot of downside from here, but maybe I'm being a little too conservative here. It's really a tough question for me, as I think, well, what are you actually investing in? That sales and marketing figure, if let's say you're facing much slower growth. And so it is a question mark. Like maybe I'm being too conservative, and their margins could actually be much higher if they don't have to put in as much in the sales and marketing, or maybe their growth could be better and they see a reacceleration. I'm just not seeing the data points that really get me there as I look at this. If you have a strong, case one way or the other, considering Zoom, I'd definitely love to hear it. I also, as I already mentioned, I'm looking for the things that strike me as inevitable, something where it's like, oh yes, this definitely has the possibility to grow, a couple 100% from here. And I'm very, I feel confident about it, and that's usually what I'm looking for here, where I'm looking at something where I'm like, yeah, maybe, like 70% upside, maybe 40% downside over the next 5 years. That just doesn't strike me as super compelling. And that's sort of what I'm looking at with Zoom. That's a hypothetical framework. The multi-bagger, I'm going to call out to my Journey subscribers this month. It's a company that's growing well over 100% and has a pretty clear runway, I would argue potentially inevitable, to growing, several 100% in the coming years. And I look at it and I'm thinking, man, the valuation isn't crazy from a risk reward perspective. The valuation isn't crazy from a like super rich perspective, but I'm thinking if they execute like management thinks, I mean, this stock price could be up several 100%. That's the type of thing. And it strikes me as, once again, you're offering a product that's potentially inevitable with a huge market, a huge runway. That's where I'm getting more interested. Here, it's a lot less clear. Like the Zoom Phone, yeah, growing triple digits, but not really moving the needle clearly. Maybe that starts playing a bigger role in the upcoming quarters. I'd love to see the additional products that really start driving it here for Zoom stock. If you're a mega Zoom bull, I'd love to hear it. And if you disagree with any of this, definitely leave a comment below. And if you enjoyed this video talking about potentially unrivaled investments, potential unrivaled stocks, we're looking at Zoom stock, ZM is the ticker, please make a point of hitting that thumbs up and hitting that subscribe button. Thanks so much for watching.